Almost finished up with the week. One more day to go, guys. It's about that time of day again, though. It's Thursday evening. It's March the 14th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help new traders find consistent, reliable, dependable, profitable opportunities using a simple three-step trading strategy that we execute together every morning in our trade room. But my job tonight is to identify the best of the best opportunities we see setting up for tomorrow, Friday morning's trading session. And we're going to cover oil, S&P, Nasdaq Gold, and we'll wrap up tonight on that mighty euro. I'm going to jump in here first tonight over on the oil market, because the oil market is giving us one of my favorite trend following patterns. Got a nice strong bull run up into obviously a little bit higher highs here, right? Not by much. Higher highs and higher lows into a wedge pattern. Now, these wedge patterns always tell us it's easy to see we're getting rejection off those highs, so I definitely don't want to be a buyer up top. What I need to do is get somewhere away from all of this resistance, maybe down at some support levels, and buy that nice deep pullback. At the same time, if I connect those highs and bring it down to that low down here, I get a great little hidden level of support. The problem, though, is if we do get that deep of a pullback, it's going to be a bear market at that point, which means we've got to look for a very specific type of entry pattern to buy off of that low. I'm looking for long opportunities here, but I got to get that pullback, and I'm looking for a potential breakout to these highs as well tomorrow. I'm going to talk about all of these plans here on the newsletter tonight, so stay tuned for that. Over on the S&P 500, the S&P tonight, of course, range bound, right? Range bound here. We've got the market all coiled up here, lower lows, higher, right? Lower highs, higher lows, flat moving average. This is definitely a range-bound market. Range-bound market tells me buy low, sell high. I want to buy low, I want to sell high. But I'll tell you, I'd be lying to you if I said I wasn't thinking this thing could be pulling back here right now for another, right, launch higher here. That big move we saw earlier on in the week, we might see another leg higher. This might just be the buyers pulling back here for us. So what do we need for a breakout going higher? I'm going to grab a look at that here in a moment here as well on the S&P. So stay tuned on that on the S&P here. We'll grab that. We'll take a look at both sides of the market on the S&P. And then, of course, over here on the Nasdaq tonight, the Nasdaq is a lot more bearish, as you can see, right, than the S&P 500. Be very careful down here on this Nasdaq, because you can see that trading range here. Trading range, slight bear bias to it, slight bear bias to it. I'm buying low, I'm selling high, but again, it doesn't take a very experienced technician here to look at this chart right now and think, you know what, this might just be a pullback here, right, in that long-term trend. So again, I'm going to put all of those ideas together here for you guys in just a few moments here, right, on that Nasdaq. So we'll jump in. I'll talk about how I want to buy off of that low. I'll talk about what I'm looking for a sell off of that high, but I'll also talk about what we need for a run higher here. So stay tuned on that in a few minutes here on that Nasdaq. And then, of course, running into our gold and our euro tomorrow. Boy, gold got a whooping on it today. Big two-legged move down, maybe even a three-legged move, depending on, right, how you calculated it. We're bearish, of course, as we go lower, and then we're kind of running into a bit of a trading range right here. That trading range tells me to look to sell up above the top of that trading range, right? I got some key levels up there I'm watching here on the gold for tomorrow. But I think the most important thing right now on that gold is the fact that we've got this rising support trend line. This rising support trend line tells me this looks almost like a flag pattern. Now, flag patterns are relatively easy. I'm looking for two basic patterns. One is the failed flag and the rally back higher, which I'm hoping we get tomorrow, by the way. The other, of course, is going to be that breakout pullback pattern below that low. We got to really thread the needle, though, if we're going to try to sell this market. So we're going to put all of those plans together here on that gold in just a moment. So make sure you stay tuned on that as we go. And then, of course, over on the euro really settling in here around that 13,000 or 13,000 big round number. There is a bear bias, you'll notice. There is definitely a bearishness to this market. I definitely do have it listed as bear momentum right now. because it is a very strong bear pullback off those highs. But I mean, I'd be lying to you if I said that big strong run we saw earlier this week didn't have me thinking it might just be a good idea to keep your eyes open for a move back up to retest the high. I've got to shake off these bears though, right? Because these bears are definitely going to be kind of trying to sell as this thing's going higher here. So I've got a great spot here to sell if we can get a good short trade, but I'll be lying to you if I said I wasn't looking for a nice rally going higher here back up to retest those highs. So we'll grab a look at those in a moment here, guys. We've got everything we need here for a great day on Friday. Euro, gold, E-minis, Nasdaq, oil. We're going to break all this down. That way you have the plan ready for a Friday session. But before we do that though, I want to make sure you never miss another great video. Never miss a newsletter. Easiest way to do that is to join our mailing list. All I need is your name, your email address, and hit that subscribe now button on the right-hand side, and then make sure you check your inbox, because I'm going to send you an email with not only a verification link to follow, but also a welcome email with a bunch of goodies in your inbox, so you know exactly how to get the most of our time together here on our newsletter. So don't delay. Make sure you join the mailing list. That way I'll send you an email every afternoon when our nightly newsletter goes live. And don't forget, we open up our trade room every morning, Monday through Friday at 8 o'clock Eastern time. If you can't be there with me tomorrow, that's not a huge problem, right? I'd love to have you there with me, but if you can't be there tomorrow morning, the next best thing, of course, is to grab all of the charts that you see me using in tonight's video. How great is this? You can have access to all the charts that I'll be using tomorrow. I'm going to post them right below the video tonight on our blog. And speaking of below the video, if you're on our YouTube channel, drop me a comment in the comment section below if you have any questions, comments, concerns, any feedback, any other videos you'd like to see me create here on our YouTube channel. That's what the comment section is for. So drop me a comment below. Let me know what you like, what you hate, what you'd like to see more of, right? And what else I can do to make this newsletter better for you guys every evening. And while you're down there in the comment section, give me a thumbs up if you like the video so far, and don't forget to subscribe to our YouTube channel. That way you get all the good stuff right from YouTube right in your inbox. And also don't forget one last thing, if you have any questions, don't be afraid to pick up the telephone, call that toll-free phone number, or if you can't be around the phone, right, or if you don't have a toll-free phone number to call, right, make sure you check out that live support tool on the right-hand side. All right, got any questions? Drop me in the comment section, call me that toll-free phone number, or use live support in the upper right-hand corner. And boy, oh boy, oh boy, is it great to be here with you all here again on a beautiful Thursday afternoon. Well, we're almost out of the woods here. Tomorrow, of course, is Quadruple Witching Friday, the third Friday of March, June, September, and December. We, of course, got the third Friday of March coming hot and heavy here tomorrow morning, right? Quad witching means all four asset classes expire. Now, what it means to us as traders is that there's this kind of cocktail between lower volume and higher volatility. In combination with that, we also have some rollover tomorrow, right? We're watching rollover on crude oil. We're watching rollover on the euro tomorrow. We'll talk more about that in just a moment. But when you throw all that together, right, when you've got all four asset classes expiring, you've got contract rollover tomorrow on a lot of these markets. We already did, of course, the E-minis earlier on in the month. But what happens is people know tomorrow is quad witching, so what do? They back away from the markets. That leads to lower volume. We also know that with all four asset classes expiring, you're going to see more volatility. So again, we kind of get this concoction, right? This kind of cocktail of low volume, high volatility, and we throw on top, right? Throw a little spritzer on top, right, of that contract rollover. Tomorrow has potential to be a neck breaker of a trading day, right? With relatively big ranges and relatively volatile moves on the chart. Now, I'll be honest, when I was a rookie, I used to stay far away from these quad witching Fridays because everybody said they were so dangerous. But I got to be honest with you, we always seem to have a pretty darn good quad witching Friday. Again, we get 4 of them every year: March, June, September, and December. I will definitely say the one in March is usually the nastier of the 4, just because it's the end of the first quarter and you got kids on spring break and tax season and weather's changing, time changes, things like that. So that one is usually going to be the nastiest of the group, right? But I'll tell you before, though, right, I am not worried about tomorrow. I'm going to come in like I do every morning. We'll open up our trade room, 8 o'clock Eastern time. We'll execute our 3-step strategy together like we always do. And I can bet you we're going to have another great day tomorrow. So don't let anybody scare you away from quad witching. Just follow your plan like we do every morning in our trade room. Now, as far as any news goes tomorrow, we really have all the news right around that 10 o'clock hour tomorrow morning. We've got industrial production at 9:15, and then of course we got the jolts and the consumer sentiment at 10 o'clock. If I had to guess right now, I would say look for the biggest opportunity tomorrow between 10 o'clock and 11 o'clock Eastern time. Not only have we seen a lot of that recently, right, later in the morning movement, but with this being quad witching tomorrow, I wouldn't be surprised if my fellow traders out there slowly tiptoe into the market tomorrow, kind of cautiously seeing what's going on and then finding their opportunities after that 10 o'clock shock. So keep your eyes open early. We'll be in the trade room tomorrow at 8 o'clock Eastern time. We will obviously be looking for whatever we get, because on Fridays, it's earlier the better, right? Friday mornings, it's always earlier the better. The key, though, for tomorrow is it looks like with that news piled up, 9:15, 10 o'clock, I would imagine, get through the opening bell on the NYSE at 9:30, and we'll look for those, right, those powerful moves from 10 o'clock to 11 o'clock tomorrow. As always, I would love to have you there with me tomorrow morning in the trade room. You can learn more about membership on our website. Now, let's jump into some charts here tonight. I got a lot to cover here with you guys. Starting off here on oil, we're going to go oil, Emini, Nasdaq, gold, and we'll wrap up tonight on that euro. All right, let's clean this thing off here for us real quickly here. There really isn't a lot to work with on this chart. What we do have, though, is really, really important. First of all, we are watching rollover right now. As I record this video just before the opening in Asia, as you can see here, we are right about sharing half, right about half the volume right now on that 519 contract. Once the 519 contract has more volume than the 419, we will be trading the 519. So we're watching crude oil right now on the 419 contract. We're watching that 519 contract. It'll either be tomorrow morning or likely on Monday morning. We don't know yet. Once we know what the volume looks like, we'll then make the move from there. And again, don't forget, if you happen to trade the wrong front month tomorrow or on Monday, it's not the end of the world. We're not talking about expiration here. We're talking about rollover. Rollover is when the market's volume, right? When the volume rolls over as well. All right, so we got our rollover reminder for that. Next up, we have a bullish market momentum. Anytime I have a bullish momentum, I know I want to buy at support. So where could I find some levels of support here? Well, I have a trend line coming up off of that low. That is a level of support, but there's one big problem here. It doesn't give me a chance to risk small to earn large. See, one of my favorite, one of the mottos we have in our trade room is risk small to earn large, right? Risk small to earn large. See, the market's bullish right now, and I definitely want to buy. I want to buy at support. I can see we have a level of support coming up off that low, but I can also see we easily have a level of resistance, right, sitting right overhead. The problem is, yes, I might be able to buy at that support level, but the level of risk I have to take is not a fraction. There's not some big reward waiting over here, right? This would be one of those trades where I'll tend to stay away from buying these shallow pullbacks just because it doesn't give me a chance to risk small to earn large. So where could I find a support level that would give me the ability to risk small to earn large? Well, why don't we do this? Why don't we connect off these highs, Let's see if I can draw this up here, right? Why don't we connect off those highs and then take that trend line and bring it down to this low down here and kind of create one of these little hidden, right? Kind of what I call kind of like a little hidden, right, level of support. Sorry, my little drawing tool here won't let me hold on to it. But the bottom line is, right, that little hidden level of support. Now, if I can get a pullback now, boy, now I can take on a relatively small amount of risk. And boy, oh boy, do we have a much larger potential reward. Now we're talking. Now I can risk small to earn large. What's the point? Why does it matter? Why do I have to risk small, right, to earn large? Well, because when you've got a big reward on the trade, you attract the big fish into the market. Why does that happen? Well, because you probably have noticed this yourself. Once you get some experience in the markets, you begin to become a selective, right? It doesn't take very long for you to realize that when you take a dozen trades every day, the only person that makes money is your broker. So the days of taking a dozen, 15, 20 trades, guys, when you see somebody, or if you're doing this right now, it's very difficult, no matter what your winning percentages are, it's very difficult to make money when you're trading. Nobody does that. At least no real traders do that. Real traders do not trade all day, every day. They're not taking dozens of trades. Experienced traders, they know they've got to be selective, if not just to keep the commission prices down. So those selective professionals in the market, they've got to be picky, right? They've got to be choosy. And are they going to choose to take trades with small reward or big reward? Well, I think that's pretty obvious, right? If you're a professional trader and you know that you've got to really pick your battles today because you simply don't want to pay all those commissions, and the more you trade, the more you usually end up giving back any money you've made before, the big fish are waiting for those big reward opportunities. Now tell me this, what if we always participate with the big fish in the market? One of the things we learned way back in Trading 101 is whenever you trade with the professionals, whenever you trade with the smart money, the big money in the market, what happens? You get a much higher winning percentage on your trades. So this is why when I look at a chart like this, it's obviously we're bearish. We're obviously bullish. There's no doubt about that. But when given the choice as far as which levels of support I want to look for, I tend to think backwards. How can I get a big reward for the risk I have to take? If I try to do it at a shallow pullback here, there's not going to be that much reward here. Therefore, there's not going to be the big fish interested. And when I don't get the big fish interested, don't be surprised if more of those trades fail on you. What I'd rather do is I'd rather get that deep pullback because that's where the big fish will be. Now, if we do get that deep pullback, though, what type of strategy should I be looking for at that time, right? Because I'm not just going to blindly buy it, right? I'm not going to leave a buy order just sitting down here and go, close your eyes. Hopefully it holds, right? We don't trade like that. Nobody trades like that. What I'm going to do is wait for the market now to pull back. And here's specifically what I'm looking for. There's two entry patterns I'm watching. One is what we call a two-legged pullback. Let's say we go one and then two legs down. Okay, that might happen, right? We bounce off that trend line there, right? So that might happen. If we get that two-legged pullback, draw a trend line over it, look to go up, over, and buy off the trend line. Okay, again, you put yourself now in a small risk, big reward opportunity. Okay, now that's one pattern. We call those two-legged pullbacks or two LPs. What else can I do? Let's say we don't get that two-legged pullback. Let's just say the market rolls lower. As it rolls lower now this sets me up for a great combination. A failure into a pullback. A failure into a pullback. So here's what this combination pattern looks like. First of all, we start with a nice strong run lower. What that does is it makes the sellers in the market think we're now a bear market. So what do? They try selling off the moving average. Once those sellers show me proof they're selling off that moving average, now I know exactly where their stops are. My stop, if I was a seller, would be right above those highs. And that now becomes my entry point for my long trade. We see 1, 2 off the moving average, and we're buying into their failure. Again, buying off a support level that puts us in a position to risk small to earn large. Now from there, I don't want to chase after the market going higher. I don't want to buy high. I want to buy low. So what I do is I wait for a pullback. I look to combine that moving average along with that prior swing high, and now we get another great spot, right, to buy that pullback. Now, I got to be honest, sometimes we don't get that pullback, right? What if we don't get that pullback here? What if we just run? What do we do then? We look for another pattern. It's called a trap pattern. Up and trap. If we don't get that pullback, look for a trap below a prior swing. I don't want to buy high. But if we start seeing it rally higher here, short covering rally, find those prior little swings right there and look for that trap entry long. So 3 different patterns we've talked about. The two-legged pullback, the failure pattern, the pullback pattern, and the trap pattern. Now that you know just a handful of my favorite patterns, right? What if we stay sideways here? What if we don't get that pullback? What if we don't get the pullback? Now what do? We stay patient. We stay patient. We stay patient. Then for what? The 1, the 2, the 2 try failure. Let those bears try once, let them try twice, and we buy it back in. So if we come out tomorrow morning and we're seeing just yuck, again, tomorrow's quad witching, right? All 4 asset class expiring. Might be rollover day tomorrow too. If we sit at these highs, wait for that run lower, let them try it again, and then buying right into their stops. Again, in a risk small, earn large environment. Now, what if I'm wrong about this, right? What if this market jumps? Can we buy up here? What would a buy look like? And what would a sell look like here? All right, let's look about both of those. What would a breakout look like? For a breakout, what I first want to see is I want to see a strong break higher. Once I see that strong break higher, I now want to let the sellers try to sell it twice. Once and twice. Once I see those bears trying once and twice, now I know there are stops sitting up here. And that becomes my goal. Buy right into those stops. If we do get that breakout pattern, I'll be looking for a 1, a 2, and a 3 measured move. Okay, we'll know more of that tomorrow once we see it. So that's if we get the breakout, right? If we get that breakout, again, it's the 1, it's the 2, right? It's the 1, it's the 2, and then we're buying into it. Real strong break higher, right? Real strong break higher. Got to really mean it. Now, how can we sell this? Can we sell back down? You can, but you really got to be careful with it. The big problem is going to be this rising support trend line. That rising support trend line is going to be a big pain in the butt for those sellers. Here's the pattern that I'll be looking for tomorrow for a sell, but don't hold your breath. Strong move up, but instead of seeing the bears try once and twice, now we see it pull back. The buyers try once. The buyers try twice, and we see a trap set up. I call these crown reversals. You're going to need a crown reversal pattern on this because you're not going to want to sell into that rising trend line. Okay, so again, strong move up. Let the buyers try once. Let them try twice. Because we have a rising support trend line, you really want to try to get that trap high. Right? Trap patterns are my favorite entry patterns whenever I have concern that I'm selling too low or I'm buying too high, right? We talk about a couple examples of those trap patterns. Now, want to learn more about these? Want to learn more of my favorite entry patterns? I hope so, because we use these patterns very effectively every day in our trade room. To learn more about these entry patterns, I'm going to put a free trading class in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog. Not to worry, grab that free course, Pause the video. I'll be here when you come back. Just don't miss this opportunity to learn more about what I call my 3-step trading strategy, which is also taught in that free trading class. In the meantime, though, let's keep going, because now you know the plan for the oil. We still got a lot more to cover here tonight. Moving over now to the S&P. We got the S&P and the Nasdaq. These two markets are relatively similar. I'm going to clean off this chart a little bit here right now, kind of keep things simple for us here. And first of all, what is our direction right now? We are definitely on the more bearish side, right? I didn't think I would be saying the word bearish this week on the E-minis, but it's quite obvious right now that there's a short-term bear bias. I will also tell you that you've got to be a little bit blind, right? You need some new glasses if you can't see the overall bullishness before we got there. So I think when you look at this, I think the overall bullishness that long-term traders will see will have buyers buying dips. I think the short-term bearishness combined with some of these trend lines coming down, I think you're going to probably see people trying to pick tops as well. So I think you'll be able to probably get both sides of this market if you play your cards correctly. At the same time, though, because we have this overall bullishness, and we talked about this earlier on this week, right? Which came first? You know, we always kind of ask ourselves that, which came first, the bulls or the bears? The bulls came first. So because the bulls came first, they're trying to get back up to retest that high right now, right? They haven't retested those highs yet. Okay, the bears are going to try here right now, but you got to be thinking, right, this overall bullishness that we saw this week, I mean, look at this darn chart, right? This looks like a trading range, not a bear market. So you can see why, even though we have a slight bearishness to it in the short term, you'd be foolish not to look at this and think, okay, if we get a shot going lower, let's try to be a buyer on this. Now, that's easier said than done, right? How do you buy this thing as it goes lower? First things first, let's get those trend lines off of there, because what's most important right now is this trading range. That's the most important clue on this chart. What does a range tell me to do? It tells me to buy low, it tells me to sell high, right? Buy low, and it tells me to sell high. Now, how do we do that with a range? We use a very specific pattern. It's called the two-try failure. In fact, you can see an example right up here, right up there. We go up one, we pull back, we try again, and we fail, right? We go down, one try, two try, and back in. With that trading range in mind, I want to buy low, break down, sellers try twice, back up in. Maybe we go higher here instead, up. Buyers try twice, back down in. You can see these patterns happening all the time. One try, two try, back up in. One try, two try, back down in. We're coming off of the high of that range. We should see us finish off something similar now down to the low of that range. So I'm keeping an eye on the move lower. I want to buy low. But wait a second, Joe, I have this bear bias to it. Are you sure you want to buy when the short-term trend is bearish? Yes, because of that long-term trend. However, I need to respect the bearish momentum and trade accordingly. So what's the best type of pattern? If the bears have short-term control, but I want to buy down here, what would be a good pattern for it? I need some sort of pattern that would allow the sellers to do their thing. And then if those sellers fail, I can then capitalize on it. Here's what it looks like. It's called a nested two-try failure. Follow the bouncing ball. I wait for the sellers now to try to take it lower. It's a range though. So we sell. No, we buy the low. We don't sell the low. Now, with that strong move down, I've got to respect those bears. They are probably going to try to sell this. How many times will those sellers try? They'll probably try once. They'll probably try twice. And once I see those bears trying twice, now I know I can buy into their stops. If you really want to get an almost bulletproof trade, let them try once, let them try twice, and grab the crown reversal. I don't think the crown reversal will be required this time. We talked about the crown reversal back on the oil market to sell off that high, right? It's the best type of pattern when you're trying to call a reversal. And by the way, guys, when you're looking at this trade, isn't this a risk small to earn large, right? I can take a small amount of risk for a much larger amount of reward, right? Much easier to make money that way than trying to do it here, right? If I did it here, see that? There's no reward there. And when there's no reward, you don't attract the big fish. How do you attract the big fish? You need a big bait. You need a big hook, right? To get a big whale on the end of your hook, right? You better have a good bait on there. You better have a big slice of tuna, right, on that hook to get that whale, right? Something nice and delicious. There's got to be something down here, right? The buyers will jump all over that. Okay, guys? Risk small to earn large. So stay away from this area here because you can't risk small to earn large there. Right? You can't do it there. There's no way to know how far we'll go because you can already see there's resistance right there. So if I have a choice between a 2-try failure pattern here or a run lower, a 1-2 nested back up, oh, it's a no-brainer. I can take a small amount of risk for a much larger amount of reward. And when you do it that way, you'll have a much higher winning percentage because you're trading along with the big boys and girls, right, in the market. Those more selective traders, right, in the market. Now, what else could I do to be a buyer here right now, right? I want to be a buyer off that low. How else could I buy this market? Because as we go higher here, right, as we go higher here, remember, sellers are going to want to sell this thing. There's a couple things you want to think of. First of all, the overall momentum is bearish, which means as we go higher, you're going to have sellers trying to sell it back down. That's one big concern. The other big concern is the high, right? The actual target is just overhead. So not only do we have to tiptoe around the sellers, but once we beat the sellers, then we've got to make sure we actually have a good risk small, earn large, right? Because what you could do is you could say, well, you know what? I'll wait for a big blast higher, then I'll buy. But wait a second. If you get a big blast higher here, a big blast higher, yes, that will beat the sellers, but it doesn't give me a risk small, earn large opportunity, does it? I don't want to do that. I don't want to buy up there. That's what rookies do, right? Be more disciplined. Be more selective. What do I want? I want to see a move that goes up, not too far, but a nice strong move higher. Then what I want to see is the very specific 2-try breakout, right? The 1, the 2, and the up from there. If you really want to get a good stuff going, strong move up, 1, 2, right? Buy up from there, right? Strong move up, 1, 2, excuse me. Trap from there. Then it's a strong move up. Right? What's going to happen up high there? The sellers are going to want to sell. Let them try once. Let them try twice. That will take care of the sellers. That'll let them do what they want to do. And then if they fail, we're buying into their stops. At the same time, though, it also gives you that trap entry. And that trap entry, again, is always the most effective setup when you don't want to buy into resistance. We know we have that level of resistance overhead up top here. So now that gives me the ability once again, right, to risk small, to earn much larger, right? A much better strategy than to just simply go up and try buying that pullback. That's not going to give you a very good risk-reward ratio. It's not going to attract a lot of professionals. If it does roll higher like that, right, if we do see this thing really ripping higher, your next best option is a trap, right? Your next best option is a trap right there. Make sure you're taking that trap, though. Don't just buy high because you want to make sure you know you got that level of resistance overhead. Now, we've talked a lot about being a buyer, but how do we sell this market? We got a bear market here going into this range, which means I can use the 2-try failure. We go up. The buyers, of course, come over. They try to buy the pullback, and we sell into their failure back down in. 1 try for the buyers. Let the buyers buy that pullback. Again, because it's only the first try, right, the chances are those buyers will fail and will roll back into that range. Very easy pattern. You see lots of examples of those, right, on these charts. What else could we do to sell here? I could also sell with a 1, 2, 3 breakout. 1, 2, 3 breakout. The 1, 2, 3 breakout pattern says 1, strong move outside the range. 2, pull back to the moving average. And 3, strong move off the moving average. If we get that 1, 2, 3, that 1, 2, 3, then I can look for mark up that low. That's the key level of resistance. Mark up that low. That creates the low of a hidden channel. Pop it now up to the high, and now we can sell off of that high. Where is our target on that trade? There's a big round number down here. There it is, right at 2,800, right? That'll put us right back into that high volume area, because as you recall from earlier on this week, right, we talked about volume and how where the most amount of overlap is, that's probably where, right, your next high volume node is going to be, right? Your next high volume node is probably going to be down around, right, that 2,800, that big round number. All right. I'm not much of a volume type trader. I don't think you need it. You just need to know how to read a chart. And of course, we talked about that earlier, right? How to use volume to identify the best locations for you. So now we've got a good plan, both the buy side and the sell side. The key tomorrow is stay patient, stay away from that middle, get yourself into those those low risk, high reward opportunities. Risk small to earn large. All right, over to the Nasdaq now. Nasdaq, again, very similar here, right, to the S&P 500. Couple things I really like about this chart. It's very clear to see that we've got 1, 2, 3 legs down. That gives me a measured move right there at 58.5. I'm going to take that off there just so you know where that is. Keep it clean here for us. We also can see we have a very obvious bearish momentum into that trading range. Now, what does a range tell me? A range tells me buy low, sell high, avoid the middle. What does a bearish range tell me? It tells me that if I want to sell high, I can use the 2-try failure. It tells me if I want to buy low, I need to use that nested, right, or that crown reversal. Remember we talked about that earlier, right? The crown reversal patterns. And again, guys, I know I'm covering a lot in this video right now. That's exactly why I give you guys access to our members section as part of that free trading course. So grab that free course in the upper right-hand corner or in that big red button below the video tonight on our blog and just take advantage of that, right? Because I'm not going to go over all the details here. It's just too much to cover in this what is already a relatively lengthy video, and I appreciate you guys, right, spending your time with me every evening, right, for the full entirety of it. The bottom line, though, is I do a lot deeper dive into those patterns inside that free trading class. So we know we got a bear bias to it. We know you're going to probably see sellers selling high. You're going to see buyers buying low. But because the overall momentum is bearish right now, we've got to plan our battle, plan our trades wisely. We also know that, again, it doesn't take a very experienced trader to look at this. I mean, it's comical just looking at it, right? I mean, it looks like a video game. It's like, right? It runs up there, right? Just insane what we saw earlier this week. And this is pretty obvious, right? It looks like we're going sideways inside of a trading range. So you would think here, naturally, big move up into a range, buy off of that low, right? Buy off that low. So that's definitely on my radar right now. We just have to get far enough out of this range, right? Because if I start buying here right now, right? If I start buying here right now, is that a good risk to reward? It's not bad, but it's really not that great. What I'd much rather get is that move lower, have those sellers kind of overextend themselves. I know I've got buyers coming up from underneath. Let those sellers now try to sell it. Because we're overall bearish, though, you want to let them try once, let them try twice. Again, if I can get that trap, then oh my goodness, we'll do double the position if I can get that trap order on it, right? It's a 1, it's a 2, and we're buying back up. Don't forget, too, that may also lead into strong move down, 1 try, 2 try. This may also lead into a breakout pullback pattern as well. So don't be surprised here if that 1-2 failure, right, if that then leads right into that pullback pattern, because you got plenty of room now. Again, I'll always try to get on that first one because that's the one that gives me that risk small to earn large. That's where the big money in the market is going to start dipping their toe in the water. And ultimately, think about it, that's where the small money will be selling, right? If you're a rookie, I'll tell you, here's what I would have done, right? When I was a rookie, I would have been all over that trade, right? Strong move down, absolutely. I would have sold that. The problem, though, is, and again, this is nothing that it's not your fault, right? There's so much garbage on the internet. You can't tell what to trust. It's no wonder that rookies make a lot of mistakes because there's no like certification exam. You know what I mean? There's you want to be a doctor, you want to be an attorney, right? You go to school for 12 years, right? You go $100,000 or so in debt. There's a bunch of courses you've got to pass, right? Everybody kind of knows the best practices about being a doctor or an attorney before they actually start practicing. That doesn't happen in day trading. So it's not surprising that traders that are rookies, when they see a strong move down like this, they go, oh, bear market, oh, level of resistance, let's sell it. But the problem is you got all that risk there for what's the reward? You're selling below the low of that range. So when you think about it, right, the big money's going to come in here and go, oh yeah, you try selling that, please. By all means, sell that thing lower because when you fail, I'll be right there with the bigger money, right, buying right into your stop, right? We get a lot of those. A lot of rookie traders will get in trouble like that, right, to sell low. But when you sell low, what happens? You're selling in an area where it's not a risk small, earn large. It's a risk small, right? Earn small, which means you're going to be right next to other rookies who can't afford to sell more as the market goes higher, and that's what leads to those markets rallying back up again. So now we kind of know the plan is, right? I want to go down, let those bears get themselves in trouble, and buy back in. And again, if I can get lucky on it, we'll get that failure into that pullback, right, and then back up as we go. Being a buyer on this right now, how do we buy high here? Very carefully, very, very carefully. What is likely going to happen is we'll see the market one of two scenarios. We'll either see it, one, jump, right? So one scenario is it's a blast higher, right? It's almost a straight line higher. If we get the straight line higher, look for the 1, look for the 2, and look for a trap for the buy. And the reason why you want that trap is just because you don't want to be buying into all of this resistance up there. And trap patterns, right? Trap patterns are the king of the jungle when it comes to avoiding buying into resistance because you're buying at support. Okay, so that's one way we're going to look for it. Another way we may see it is we may see a 1, 2, 3 reversal, right? A 1, 2, 3. Okay, that may also happen. If that's the case now, mark up that high, and you're ultimately now looking for that pullback right there, basically. What I'll do, though, is I'll mark up that high, I'll mark up that channel, and that becomes our sweet spot, right, for the buy from there. So if we do see that 1, 2, 3, that very strong move higher, okay, 1, 2, 3 reversal, as we talked about earlier, right, then we plan our entry there to buy there. Again, making sure we're not buying too high here right now. All right, guys? So we got a couple different buy options, one above and one below the range. How do we sell this market? Well, one easy way to sell would be we go up. The buyers, of course, now try to buy the pullback at the moving average. We now know where the stops are, right? And we sell into their stops. It looks a lot like this. Up, back, up, selling into stops. Not a very attractive trade, though, right there. You'll notice because, again, you don't have a lot of reward for the risk that you're taking. I would much rather see that type of trade right up above the range. That way, when you're selling, right, you know I can take a small amount of risk for a relatively larger amount of reward, right? You always want to think about where's my exit going to be before I get my entry. And then how about the downside, right? If we go lower, that 1, 2, 3 breakout, right? Strong move down, pull back to the moving average, break away from the moving average now. Once we see that run off the moving average, then we know we get the 1, the 2, and we look for that sell off of that high, right? Where's the target on that if we do collapse here tomorrow? Well, where's the volume, right? Where's the volume? The volume is back here, right? So there's your target right around that big round number again. Okay, that's where the flat moving average was, right? That's where the overlap was. Okay, that's where the high volume node would be, right? If you were looking at a chart right now with a volume profile on it, that's where all the volume would be. So that's where the target is, and possibly soon to be a rally back up once we get there. But that, of course, is a little bit further down the road. Nasdaq, looking good. How about some gold right now? Over on the gold tonight. So gold is obviously bearish. There's no doubt about that. The only question I have right now on the gold is, are we a range or are we a flag? It looks to me like we might be a bit of both here right now. Let's talk about both of them. One would be a flag. We have a strong move down, right? It's a real strong bear move down into this kind of flat channel, right? And the market's kind of, trading sideways here. This is a flag pattern. It's not a bull market. Okay, remember, a bull market requires that 1, 2, 3, right? That real strong separation away from the moving average. And again, you'll learn all about moving averages and how we use reversals in that free trading course in the upper right-hand corner that I mentioned earlier. For now, though, there are basically 3 things we look for on a flag pattern. One is the breakout pullback. Strong move down, pull back, and we're selling off the underbelly of that flag. Now, this is where you've got to think about those risk small, earn large environments. Because what ends up happening is on these types of trades is if we do it now, it's not a very big reward, right? If we do it soon, it's not a big reward. But if we wait here, though, and it goes higher, and it goes higher, and it goes higher, if we wait a little bit of time now, then it becomes a whole lot more lucrative. Does that make sense? If I try selling it too close to that low, it's probably going to fail on me. So flag patterns, again, going in that same theme tonight of risking small, right, to earn large, it's better to wait patiently for those breakout pullbacks for flag patterns. Okay, never a guarantee. Obviously, these could break down, but you control your own destiny as a trader, which means wait for it. Wait for those times where you know the odds are stacked in your favor. When you get a full house, right? Wait for those times when you can risk small to earn large. Okay, so think about how a flag pattern will make that difficult at the beginning, but it becomes easier at the end. Okay, that's one important factor of flags. Another thing I want you to remember too is we oftentimes get these flag failures. And flag failures are one of my favorite ways to trade them. They go something like this. They overshoot, right? They overshoot and you get that 1, that 2, and gone. These are one of my favorite, have quickly become one of my favorite patterns here right now. We go through the top of the flag. We know that sellers will try to sell it. We let them try twice, and we buy then into their failure. Okay, it's relatively aggressive, but you're going to have to be aggressive because that big move down, all of those sellers, once they start seeing this stuff above the flag, they're going to freak out. They're going to panic, and they're going to become buyers. They're going to cover their short positions, and that's going to throw gasoline on the fire, and the market will usually race higher here. So as I go back to my chart right now, there's my flag pattern, right? Here's that low. I really don't want to be trading here. That's not a very attractive area, right? I want to get higher, up and over. That's a much more attractive spot to sell that flag pattern. And you'll notice it puts me right inside that battle zone as well. Okay, now, speaking of the battle zones, right? So now you're going to know how that works. And then again, it would be the up, 1, 2, and then in from there, right? It's a nice, strong, again, 2 try failure, right? And then running back up. Target, of course, is up to that 1311. Okay, that's the flag pattern. How about the range? There's also a range in here. So this range is pretty interesting here right now. The only problem we have is this rising support. So what does a range tell me? Ranges This one, of course, has a bear bias to it. Let's get this out of here so we don't have too much stuff confusing us here right now, right? With that trading range, it's bearish. So what do we do with a bear range? We sell high. How do we sell high? One try, two try, sell back down. Let the buyers try to break out, let them try twice, and sell into their failure. The problem with this type of strategy, though, is that rising support again. So that rising support trend line tells me I've got to get below it and use it as resistance. That's the sweet spot for tomorrow. So when you look at this all together, it looks like that rising support trend line, that's going to be our biggest headache. It's also the biggest reason why don't be surprised if you see this thing up 1, 2, and gone because of that rising support trend line. Now, one more thing to keep in mind here is if we keep going sideways, if we just keep rolling sideways here now, that will get rid of that rising support, and now we'll make this a completely different ball game. Now we can easily go 1, 2, back down. We can also, by the way, go down because we're bearish. I can buy this with the right pattern, right? The 1, the 2, and the back up we go. I can use a slightly different variation of that 2 try pattern going with the momentum. I use a different variation of it when I'm going against momentum. The range provides me with the magnet. If I'm selling, I let the buyers try twice, right? If I'm buying, I wait for that strong move down, then I delay the entry until I see those sellers try a second time and fail. All right, guys? So that tells you now how to sell it and how to buy it now. How do we break free of this range? What would a breakout look like? A breakout would be either a 1, 2, 3 breakout, or same thing downside, 1, 2, 3 breakout. If we see this thing really blitz lower, hold that moving average pullback and run, fine by me, right? We'll mark up that new low and just sell right off of that channel high. So that breaks it all down for us. One last thing, don't forget tomorrow, quad witching. Do not be surprised if gold is really slow and sluggish. Gold tends to kind of curl up in the fetal position around quad witching, really any big news in the market these days. And if that does happen, stay patient. Wait for it up 1, 2, back down, 1, 2, and back up. We'll keep buying low, selling high, and we'll do our job correctly. Over on the euro right now, let's see if we can put all this information together here, shall we? Over on that euro, boy, that euro really has a nice, strong, bullish momentum, as you can see, right? There's definitely no doubt about that. Nice, strong, bullish momentum overall, but that short-term momentum is very bearish. You can see a very strong move down into that trading range. I can also see a falling resistance trend line, and I can see we're also right on top of that big round number. So how do we do this? Well, again, I got to respect the bear momentum. That bear momentum tells me that if the market's in a range right now, we're going to go up and probably see sellers trying to sell this market back down again. But at the same time, though, all of that bullishness tells me we're going to probably end up back to retest that high at some point. So how do I do that? How do we buy this market and how do we sell this market? Because I think you're going to have a chance here to grab both sides of this price, right, of this market. Let's dive in. Now that we know the big picture here, clean off the charts a little bit here for us. This overhead trend line is at first my biggest obstacle. But if you think about it, it actually becomes a pretty good tool for us. For example, I want to be a buyer. Let's just say I want to be a buyer here right now. If we go higher here, there's a couple different options we can look for. One is going to be if it blasts higher. If it blasts higher, you don't want to buy high here, so you wait for that trap. 1, 2, and go. If it blasts higher, you look for the 1, the 2, the trap low, right, and you go from there, right? A 2-try breakout. Now, what if we don't get the blast higher? If we don't get that blast higher, now we let those sellers go to town, right? If we don't get the blast higher, we let the bears try once, we let the bears try twice, and we buy into their stops, right? Let them try once, let them try twice, higher highs on those 2 tries, and we're buying into that stop loss now. We're buying now, small risk, right? Much bigger reward. So two basic types of patterns. They both include, though, the sellers have to try twice up there. The only difference is if it jumps, you run out of space, you need a trap, right? You got to get a trap if it jumps. If it doesn't jump, let them try once, let them try twice, and then we can buy from there, right? No trap needed at that point. Okay, so those are the buy plans I'm watching here for tomorrow. What if we go lower? If we go lower here, this is going to be a little bit more tricky because you got that trend line coming down. Okay, so if we go lower here right now, here's what I'm thinking. If we go lower, right, one try. Now, we're long-term bullish, but we're short-term bearish. So for me to be a buyer, I need to let those sellers try once, try twice, and I need to get above that trend line, right? That trend line is my enemy, but it becomes my best friend if I can use it in combination with that two-try failure. You can see a really good example of what that'll look like right here. Strong move down, 1, 2, up we go. You see a lot of these actually, right? There's a lot of these where you're in an overall bullish, but it's a real sharp pullback, and you look for those bears. They try once, they try twice, and then up from there. So if we do see that strong move down here, let them try once, let them try twice, get above that trend line, and use that trend line now as a level of support. Okay, so relatively easy idea there how to be a buyer. How do we sell this? Well, being a seller, on one side of the coin, if we go higher here right now, if we do go higher here, right, we make the run higher. If we do run higher, we know we have that long-term bull, but we're short-term bear, which means I can look for now that 1, that 2, and I can sell it back down into that trading range. Again, I'm using that trading range now to find levels of resistance overhead. I teach all about those range expansion techniques inside that free trading course in the upper right-hand corner, right? How do we sell as we go lower? If the market goes lower, I've got to see that strong breakout, right? That 1, 2, 3 breakout, that 1, 2, 3 breakout. Get the breakout, get the reversal, and then we can sell from there, right? Where's our target? Where's our target if we get that 1, 2, 3 reversal? Where's our next big our next big volume? Down here, right? If we get that 1, 2, 3 reversal there, we're looking around that 12,400, right? That's your next high volume area. You don't need a volume-based chart. Tell that. The flat moving average gives it away. That's where the volume is if we leave this 13,000 area. All right, guys, we got a great plan here setting up for tomorrow. We got a bunch of ranges. Not surprising because, of course, we got that quad witching happening, right, tomorrow morning. Don't forget, as I always remind you guys, we'll be together every morning in our trade room, 8 o'clock Eastern time. We'll grab some oil, S&P, gold, euro, Nasdaq. We'll trade exactly the plan we have laid out here tonight, and I hope to see you there with me tomorrow morning at 8 o'clock Eastern time. If I don't see you there, don't forget, we've got one of the best free trials in the business. As part of your free trial, you'll get that invite to come join me as a guest in our trade room. You'll learn through the free trading course, and you'll see what it really feels like to be a client here at School of Trade. Don't forget, you can always call that toll-free phone number, use that live support tool, and learn more about our 3 levels of membership right here on our homepage. And guys, what a great week it has been. We survived contract rollover. We survived the time change. Well, I guess maybe survive may not be the right word for it. I'm definitely going to plan on catching up on some sleep this weekend. I'm sure you will as well. If you're in Europe, you've got your time change coming here soon, I believe, next week, towards the end of next week too. So it's coming at you here next week as well. But I'll tell you, a very, very good week as we finish up with the quad witching session. I hope to see you tomorrow morning, 8 o'clock Eastern time. If not, keep in touch. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.